Good morning from Los Angeles and Happy New Year. It's Alyssa Corman, Ed Carson here with your market update. And on today's show, we're taking a look at Tesla, Wingstop, and Salesforce. But first, we're checking in on the major indexes. We are down across the board, but off of the lows here. We have the NASDAQ down about 0.7% and the S&P 500 and Dow down about 0.8% each. So down today, but off the lows. What's kind of shaping the tone here today?
Yeah, I mean, we have a couple of things. Some China economic data last night was much weaker than expected, or it signaled contraction in manufacturing for the first time in almost 2 years. Then we had a top trade official for Trump say there's reports that he wants, thinks that China tariffs were going to need to be raised. That's sort of like, people don't want to hear those kind of things about weak economics. So that raises growth concerns. But it's still nice to see, off the lows. I mean, we've rallied for a few days. We have not had a follow-through day yet. I mean, so while all the talk is that like we're rallying. Well, we haven't really committed. I mean, there was going to be a bounce. The question is, are mutual funds and other big institutions, are they going to say, we thought about it, we believe in this rally, we're going to put serious money into it, this kind of thing that really says, we're going to keep on buying going forward, and that would be sending the signal to investors. Okay, maybe I can jump on board too.
Exactly, and coming off the sidelines there, but it is still early on in the session, so
it can go all over the place. Obviously, yeah.
That's right. So make sure you are following along, not only throughout the day, but especially after the close to see where we end up. And of course, we always have our end of day analysis in the big picture at investors.com. So let's check in on Tesla now. That stock heading lower today, down almost 9% now in heavy volume, breaching a key technical level here. We do have Model 3 deliveries for the quarter coming in just over 63,000. That was slightly below an estimate, so maybe concerns here about waning demand.
Well, yeah, I mean, there's still that question about what's going on, and it's like, there have been reports last week that maybe inventories were piling up on lots. No. Nowhere near what other automakers have it, but Tesla basically was almost like, we make it, we're shipping it out the door because they were having production issues.
Right.
Now as production is maybe a little less of a problem, that would be a concern. Tesla also cut its price by $2,000, which is
for every model.
For every model. There's been evidence that maybe the Model S and Model X, which presumably have higher margins, that demand has been waning as well. That's partly to offset the waning the tax credit, which is waning for Tesla. But still, if Tesla demand is really strong, they could say, hey, sorry guys, you could have bought it earlier, now you have to pay. The stock, it tried to break out. Boy, it has not looked great since then, and it's really choppy. It had a choppy 2018. There's a lot of other stocks that are setting up that have better fundamentals, better technicals, that investors probably want to be looking at right now.
That's right. So clearly past time now here to sell if you bought on that breakout.
Yeah.
And if Tesla does rebound here, we would want to see it shape a new base and not just look for it to re-clear that old buy point because it's fallen so much.
Yeah, and maybe try to trade a little tighter too. I mean, that's something you want to see is like a little bit cleaner action, especially on the right side of the base. And Tesla just really hasn't had that.
That's right. Well, maybe some other examples of better charts here. Wingstop might be one. Wingstop shares are forming a base here. This is a name that has been on our growth screens quite a lot here. So maybe this is one holding up and for the watch list for if we can continue to move higher here.
Yeah, Wingstop is one of several restaurants that have done pretty well. McDonald's has done reasonably well, though that, and Starbucks, those are stocks that had held up well. They've came back in December like everything else. Wingstop is acting pretty well. It's coming back down below the 50-day line today. It'd be great if it could hold that support, but it's been consolidating reasonably well. It undercut, October lows recently. It's almost a double bottom, but I think we're going to go with the conventional buy point around 72, 72.10, though it has hit resistance around 66. So that's something out there as well. But the relative strength line, that's the blue line there. That's actually pretty much at record highs. So that's a positive sign.
That is positive. Shares about 14% below a potential entry there. And looking at this chart, one thing that I notice is that it's spent a lot of time below that 50-day line. So something to consider, even though you have the positive of that relative strength.
I mean, obviously, with the correction and bear market, I mean, all the indexes are well below their 50 and 200 day. There's a lot of stocks that have spent most of their time below the 50-day, but you'd like to see it be above that.
Well, I guess cup half full then. It's been hovering near its 50-day line. All right, and now let's take a look at Salesforce, ticker CRM there. It too is forming a base, but this base pattern is a little bit messier.
It is messier, and it's still sort of almost like, is it a base? Is it still in a downtrend? I mean, a couple of positives. You know, it hit a low. It really sold off sharply, actually before even the market did, and it bottomed out in October. It did, or November, but then it did rebound on earnings. You know, you can see there was a gap up there, really strong. It was one of several software makers that had really strong earnings. You know, then it faded back down, but you know, the relative strength line is still it's close to record highs. The stock is near its 50-day line, but yeah, this one's going to take more work.
That's right. It's trading about 17% below that left side high and the potential buy point here. Fundamentals remain strong at Salesforce. It has seen decelerating earnings growth, but that's because earnings growth has been just so strong.
Yeah, so I mean, obviously you'd want to see the stock build the right side of its base some more, but yeah, this is definitely a strong leader. Software is a strong sector, so this is definitely something to be looking at as well.
All right, everyone, make sure you head to investors.com throughout the day and after the close for the latest market news and analysis. And you can also check us out across social media. We are on YouTube, Facebook, Instagram, and Twitter. So make sure you are following and subscribing for all the latest. Thanks so much for joining us, and we'll see you back here tomorrow.